Hope you guys are having a good day. So, wanted to talk to you guys about a couple of things that really important when it comes to trading. Don't fight the trend. Don't try to catch a falling knife, and the dead cat bounce. Now, what's this all about? Let's jump in. Basically, let's say you're a trader and you want to get in and out of stock. So it behooves you to go with the trend of the stock. Even though you're not in it long term, you still want to be buying and selling a stock that's in an upward direction. At least you're going with the flow of the stock. Same thing, if you want to short a stock, you should be shorting a very weak stock on a bad day, even if it's a short-term trade. You don't want to go against the trade. First of all, because a trend. First of all, because you want the flow to go with you, and second of all, because it makes it less challenging to get caught up. Let's say things turn around. It's easier to figure it out. What do I mean? Let's say you're in a trade of a very strong stock and you think, okay, right now it's had enough of a move, I want to short it right now. All of a sudden, stock starts turning around, everything looks like what you predicted, you get short the stock, and all of a sudden it turns around and keeps going up. Now, you can't really give yourself any wiggle room because this might be another blast off. Whereas if you were long the same stock and it started coming in, you could give yourself a little wiggle room because maybe it's just settling and you didn't get the most perfect entry point, and now it can go up again. Same thing when you're in a weak stock. If you buy a weak stock, so there's this concept called the dead cat bounce, which a lot of people fall for. And this is a very important part of trading. Anything looks like it's gonna have a recovery. What do I mean? Dead cat bounce. You take a dead cat, you drop it on the floor, it doesn't just go splat. Theory is, it bounces a little and then it goes splat. Sorry cats, I'm an animal lover, but that's what it's called, a dead cat bounce. So somebody sees something falling and all of a sudden they're like, oh, this is the bottom. No, before there is an official bottom, whether short-term or long-term, you want to see it hold up a couple of times. That's why we have different graph patterns that we rely on, which you should probably, do a little bit of research on. Even if you don't want to be a position trader, it's good to know graphs, just basic graphs. Along the same idea is this concept of don't catch a falling knife. You don't want to be the one to say this is the bottom. You have no idea where the bottom is until it formulates a strength, like the opposite of a double or triple crown. You see the stock comes down, tries to go back up. Don't be that first guy to buy it. Comes back in again, tries to go back up, comes back in. So now it's leveling. Now it's not sure which way it's gonna go. Nobody knows, not the professionals, nobody. Now when it starts to make a move, it's a new move. This is called settling and reestablishing a new pattern. You don't want to be catching a falling knife, because even if a stock came in from $30 to $23 and it looks like it's having this little bounce, it could be a dead cat bounce and then just falls apart. So it all really comes together. It's all really one concept that works with different principles put together. You don't want to fight the trend. You want to be buying up stocks and shorting down stocks, whether for long term or even just for a small move. If you do short a strong stock or you do buy a weak stock, be prepared real quick to get out of it. You don't want to try to catch a falling knife, even if it looks really good. You want to give it an opportunity. And the proof is, next time you see a stock coming in really hard, pay attention. You'll see it kind of retouches a couple of times before it takes off. You're not going to lose out. Yes, of course, there's always an exception to the rule, but for the most part, let it reestablish itself, because that's what trading is. It's following the crowd. So until the crowd decides something's going to happen, it's not going to happen. There isn't this like video game that we're following. The stock market is people, and people understand this. So let it reestablish its settled position, and then you can get in. And again, don't catch a falling knife. Don't fall for a dead cat bounce, none of that. You want to be somebody that gets in at a good spot. I hope this helps you guys. Again, we're trying to put together the psychology, the logic, and of course some concepts from position trading and momentum trading so that you can get into some nice swing trades, whether they're short-term, long-term, whatever. Happy July 4th. God bless America. God bless you. Like, subscribe, tell your friends. Have a good one.